Hey guys, welcome back to today's video. And what we will be doing today, we will be demonstrating how we can use the 215 technique to successfully scalp gold and be profitable while doing so. Now, from our last video, we explained that the 215 technique is a high win rate strategy which uses the value of 2 to identify key price areas for trade entries and also profitable exits. And with this information, we'll be demonstrating this on the chart so everyone can have a clear understanding of how we can do the 215 technique. Now, before I demonstrate how we do the 215 technique live on the charts, there are three important things that we should do or must be aware of before we begin to enter any trade. The first would be fundamental analysis. This is where we check if there's any scheduled news events that is due to be released which may affect the price movement of gold. Now, the most popular source of this information could be Forex Factory or investing.com. But most brokers these days actually do have a section in-app where they provide this information. Now, the reason why we check this is because these news events may have a high inflow of volume inside of the market, and then the market may behave in a sporadic way, which may affect our positions, and we don't want to be in a trade whenever this is happening. The second thing you would do would be top-down analysis. And we do this because we want to understand the historical price movement of gold. So what we will do is that we will mark out the support and resistance on the higher time frames and then bring it down to the lower time frames. So we'll start off on the daily time frame, then to the 4-hour time frame, then from the 4-hour to the 1-hour time frame, and then we'll close it off with the 30-minute time frame. The third thing is not actually a step. It's more of something that we should be aware of, and that is knowing the ideal market. Now, based off historical data that we have gathered from months of back testing, it was proven that the technique has a higher chance or a higher rate of success in the London session and also in the Tokyo session. It can still be used across all 4 sessions, but if you want a guaranteed or a higher rate of success, it's best to do it in the Tokyo and also in the London session. So these 3 things are very important towards the overall success of the 215 strategy, and we should always ensure that they are carried out. And that's our fundamental analysis, the top-down analysis, and always ensure that we are in the ideal market session. Now that we have these things out of the way, let's begin to dive right into the technique. The 215 technique can be broken down into 3 quick steps. Step 1. Mark a line on the 50-minute time frame at the current price and call this your point of interest, or your POI for short. It is very important for us to know the price at which gold was trending when we initially started reading the chart, because this price is going to be very crucial as the trade structure is played out. And you will see this more as we go along. Step 2. Measure $2 above the price of the POI and call this your buy entry. And also measure $2 below the POI and call this the sell entry. So now we have a point of interest. We also have a buy entry line, and we also have a sell entry line. And all this is done on the 15-minute time frame. Now, usually when you do the $2 above and $2 below on the 15-minute time frame, it usually aligns with support and resistance levels on the 15-minute time frame, which is very important as to why we always do 2 up or below the POI. Step 3, trade entry confirmation. Now, what we do is that on the 5-minute time frame, we are waiting for a body candle close above the buy entry line or a body candle close below the sell entry line. And what we will then aim for as our take profit areas would be the lines that we have marked out, the support and resistance which we have marked in the top-down analysis bit of the 215 technique. Now, let's take a look at this example of the 215 technique on gold. Now, as we can see, the price is moving between our point of interest and our sell entry line. So we're just waiting for a confirmation. Now, it has just went below our sell entry line and has just closed below our sell entry line as well. So this is a great signal to enter a sell trade. So let's just do that now, and we will aim for our 30-minute support for our target. Brilliant. Now, so quick, so easy. That's how the 215 technique actually works while trading gold. Thanks for watching. Please like and subscribe, and stay tuned for our next video where we demonstrate how we backtest our 215 strategy. If this technique has helped you in any way, please let us know in the comment section. Thank you.